When you invest in a listed product, it might feel like a simple transaction, but behind that trade, there is a structured system working in layers. Every listed product begins with an issuer. This is the entity responsible for creating an instrument, defining the structure, and determining what kind of exposure it's gonna bring to the market. That exposure could be linked to equities, commodities, alternative strategies, and other underlying assets. But the key point is that exposure is defined before the product reaches the investor. Once structured, the product is admitted to trading on an exchange. The process is known as listing. Listing is what makes the product visible within the market infrastructure. Investors don't interact directly to the issuer. Instead, access happens through the broker. The broker acts as a connection point between investor and the exchange, allowing the product to be bought and sold the same ways as other listing products. Once listed, the product enters to a secondary market. This is where investors can trade it, and pricing begins to move. Prices are influenced by multiple factors, including underlying exposure, market conditions, liquidity, and how the product is structured. This includes the materials that describe how the product works, what exposure it provides, and what key characters it has. Identifiers like ISIN help to ensure that the product can be identified. Some of these terms, like ISIN or listing, are new for you. You can explore more at alternatecta.com, at our educational hub.